Today about my friends at Bitwise and why they're the best crypto asset manager out there. I've talked on the show often about how crypto is reshaping everything from finance, portfolios, and even macro. Everything's ramping up. We've got tailwinds in DC, interest from TradFi, and growing optimism. But smart investors see all of this and focus on the how. What's the savviest way to seize this moment? And that's why so many investors I know are working with Bitwise today. They've been all in on crypto since 2017. They're OGs. They've got more than 30 products to help investors like you get access to whatever they need or want. They've got a team of more than 100 across the US and Europe, and they have over 10 billion in client assets. You know, a lot of people know Bitwise for their ETFs, you know, how they manage the world's largest crypto index funds and the wide range of crypto ETFs they have. But not as many people realize Bitwise manages private alpha strategies too, and has SMAs for large investors, and is one of the landing between macro, crypto, and the exponential age of technology. These three things are the most important factors in our lives, not just our investing lives. But I know most of you are backing the fastest horse in the race. How do I put all of this together and make as much money to unfuck my future? The answer to that is obviously crypto. And so what I've done is something special. I brought Jamie Coates, who's our chief crypto analyst at Real Vision, who also is part of Real Vision Pro, where myself and Julian Bittel and also Andreas Steno are all part of the team, producing really some of the best research in the world for you to navigate these times. Jamie is an extraordinarily good crypto analyst. He does things differently than me. I'm very top down, but he is bottoms up, detail driven, and he has some incredible insights that I wanted to share with you. I haven't caught up with Jamie for a while, so I thought we just catch up, have a chat, get his thoughts on what's happening in crypto, how to allocate our money, and where it's all going. I hope you enjoy it. Join me. It was not lent out to generate interest. There were no credit checks. Funds in less than 12 hours, no monthly payments, and repay whenever you want with zero penalties. And they just don't talk security, they prove it. Ledn offers proof of reserve reports, verified by a top accounting firm every 6 months. Ledn is 100% focused on doing one thing better than anyone else, giving Bitcoin holders a secure from 3 trillion to 100 trillion, which is my estimate by just extrapolating out the trend rate of growth. You need larger players each time because the market cap is bigger, right? There's no way you're going to get to 15 trillion this cycle unless you've got bigger players. So it's kind of, I don't think it's what people think it is. I think it's just a function of the size of the market. The bigger it becomes, the more that those people are involved, and the more blockchain technology gets used, the more it uses the alts for infrastructure rails for new forms of compute and storage and all the other things that are coming. So I just thought it was interesting because everyone's like, oh my God, it's a super cycle because of this. I'm starting to err towards, well, we've talked about this before, a longer cycle, just because the business cycle is still below 50. So generally it takes a while to climb up. And the future of the Middle East, I've always been bullish on the region because I think they're figuring out, you know, what the world looks like without the oil and how do you invest the oil capital more efficiently. And they are just like, our future is AI because we've got endless energy right now, so we can do endless compute and data centers and all of that. That obviously plays for Bitcoin mining, but they have a lot of free cash flow and they want to become more modernized economy. So they're like, well, we'll build on blockchain rails and use AI in government. They're already using it in government, in asset allocation models, all sorts. So it's really interesting to see how fast they're moving. But yeah, you're right. Most people don't understand that they're going to be using a lot of underlying blockchain technology that's not just the storing of Bitcoin for a sovereign wealth fund.
Yeah, it's just such a contrast to some of the Western countries that, you know, are constraining themselves on the energy side, whereas, you know, in the Middle East, they're overbuilding their energy grids, and because of that, they've got just the top form, and then global liquidity will roll over. But the contraction periods in global liquidity traditionally have only been sort of 24 months, so 2 years, and that was in 2014 and 15, then in 2018 and 19. The one that we've just gone through has actually been 3 years. So to your point earlier about the cycle being elongated, if you look at global liquidity here in white, you know, it's been sort of, it was down sharply in 2022, and then we just had this sort of contraction period, like a wedge pattern that we've sort of been squeezing into and now breaking out of. So a longer contraction.
Buying that low in the first, that's what we did, and it worked really well. Back end of 2022, when global liquidity, it doesn't give the strongest price action, but I don't know, Bitcoin's up 6x since then. So it does work just by getting the bottom of it. But the breakout is when it really counts.
So a multiplier of 5. And what's really interesting is that we got the breakout in global liquidity in early April as the markets were sort of tanking. So that was this low that we went through, which really wasn't much to worry about, like in terms of Bitcoin pullbacks, but it felt pretty nasty at the time. Massively outperformed the S&P, massively outperformed the equities on a volatility adjusted basis, even though, it was down 30% and the S&P was down 20%. On a risk adjusted basis, massively outperformed equities. And so when it broke out, when global liquidity broke out in early April, Bitcoin rallied 40%. Global liquidity from that breakout is up about 2%. That's roughly what it has done in those previous bullish regimes where global liquidity breaks out to new all-time highs. You get a sensitivity factor that is anything below a 4 is sort of just neutral, normal conditions. When we're at 4s, you have to start thinking about, okay, if there is chips to be taken off the table in Bitcoin or crypto.
And this is not necessarily the full cycle top, it can be sub-cycles within, right? Because I'm looking at the got to 5s a couple of times, backed off again. So you kind of use it like a weekly RSI kind of idea, is like an overbought, oversold indicator.
Yeah. So what you said is like perfectly correct. It's like you've got to use it with some context. Like an overbought RSI at the beginning of a breakout of a long-term downtrend is not a sell signal, it's a buy signal. But this is a little bit more calibrated to knowing when things are really stretched relative to the one the one statistical relationship which really seems to matter. But is there excessive leverage in the market? Like if that is also happening at that time, boy oh boy, do you have a very strong signal for a looming market top. Because derivative like open interest and the factors that go into the leverage component, the derivatives risk score, are very finely tuned to tops and also bottoms. So that plus also unrealized profit, which you can see on chain, come together in a very good way, like in terms of the confluence that you can get from it to give you sort of high probability zones of when things will top and bottom as well. So this picked the bottom very, very well. And in early 2024 again, when the ETFs were launched, the actual top, the risk score of 5 came very close to the market top. And then again in December of 2024 as well. So this tells that other side of the story. So if you're overvalued versus global liquidity, is it driven by spot or is it driven by leverage and derivatives? If it's driven by the latter, that is a much more serious problem because that unwinds more quickly.
So, I mean, again, brilliant work. So looking at the liquidity risk score, we're neutral. Looking at leverage, we're kind of low, not even neutral, we're pretty low.
So Bitcoin goes up, open interest goes up. So there isn't much signal there. So for me, the signal is the rate of change.
Right, okay, makes sense.
Too much, too fast.
Yeah.
And then there's funding rates and there's options and there's, options skew and there's, other things we can use as well. But generally, that's kind of the way I look at it.
Okay, so what next?
And the third one is network profitability risk score. So this is the on-chain metric. So this, there is like a multitude of metrics to choose from now. There's some great providers out there. I use Crypto Quant, Glassnode's obviously another one. There are others. And there's lots of different ratios and metrics that have been devised over the years that have been pretty good indicators of market tops. So this is really a synthesis on crypto market and the broader sort of altcoin market, is just adopt some of the traditional market breadth, analysis that you and I have been using for 20, 30 years, and bring it to the crypto market. And the only way you can do that is if you start using sort of index data on crypto. So I've partnered with this company called Bitformance, and we've created the top 200 index, market cap weighted, equal cap weighted. Then we've done sectors and subsectors. And so that allows me to do all sorts of interesting things from a market breadth perspective. But this is just a chart showing the top 200 equal weighted index. So it's a pretty good proxy for like altcoins. Every single asset in the top 200 weighted equally. And you can see it's been stop, start, stop, start. It's, the opposite of the Bitcoin chart, which has pretty much been up to the right. We've had these bursts of activity. So what I've created is an advanced decline line. So equity traders and investors are familiar with this one. So equity, the advanced decline line should be going up as the market goes.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.